Well, good afternoon and welcome to the Wednesday Lunchtime Drive Through on Wednesday, March the 30th. The first quarter's almost over of 2022, and I'm Damon King. I'm your host, certified financial planner and investment advisor with ChappelWood Financial Services, also the lead instructor for ChappelWood University, the educational branch of ChappelWood Financial. And I am very, very honored today to be joined by a very special guest. And we're going to introduce him in just a second, but a little bit of housekeeping. As you can see, our topic today is what's next for the real estate market. And if you've got a question or a comment during the show today, please either enter it in the Q&A or the chat button down below. You'll see your little toolbar. Just hover down there and you'll see it pop up and you can ask any question you want. This is your time and this is for you. So allow me to welcome Mr. Doug Eckert. Doug is, if I can change screens here, Doug is a licensed realtor for Metro First Realty Unlimited. And Doug, thank you so much for joining us today.
You bet. Thank you, Damon. I appreciate you giving me the chance to be here.
Well, excellent, excellent. So it's been an interesting, at least 12 to 18 months in the real estate industry. What's life like for you right now as a real estate professional?
Running. That's probably the best way to say it. Yes.
Okay.
12 to 18 months. You're right. Just really, even within the last week or two, I can still see another increase in just the activity and the craziness of it all.
Yeah. We had some questions submitted ahead of time. And of course, again, ladies and gentlemen, I encourage you to ask your questions today. Probably the biggest question we've been getting is the real estate market still hot right now?
I'd be willing to bet everyone on here would probably say yes. And I think they're correct, but I'd challenge you. It depends on which side you're on. If you're representing a seller, yes, it's absolutely hot. If you're representing a buyer, it's like Oklahoma weather with the variations there, right? When you have a house for sale right now, there is a good chance, depending on location and condition, that it's going to be one of those cases within 24 hours, you're going to have dozens of offers. Offers are probably going to be over what you've asked for, and it's going to go pretty quickly. And when you're representing the buyers, though, you are putting in multiple offers. You are going to lose out on probably several houses before you get the one that accepts your offer. So there's a variation there depending on which side of the transaction you're on.
Yeah, when someone's winning, someone's always losing, right? That's the nature.
Absolutely.
So yeah, that's a really great answer. The answer is we always like to say on the radio show, Victoria and I, it always depends, right? It depends on which side of the transaction you're on. But suffice to say, we're still seeing low inventories but high demand, right?
Absolutely. That is the biggest thing. Is just there's not enough houses out there. I'll give you a real world example on our MLS, the database for the Oklahoma City metro area. When you put in no parameters, the results that come back, it used to cap out. It would just say 5,000 plus. You weren't sure what the actual number was. You just knew it was more than 5,000. Last night for a home buyers class, I pulled it up just to show everybody, and there was 2,020 houses available in the Oklahoma City metro area. So less than half of what would be expected and less than half in what we'd see just even a year ago.
And that's houses at all price points, all geographic locations within the metro area. Doesn't matter.
Correct. Okay. Yes.
That's pretty amazing. Only half of the inventory we normally see. So that actually is a great segue into the next question that we got. Aside from demand, so we know that supply and demand help to influence prices. When demand is high and supply is low, it's basic economics, prices go up. But based on your experience and your professional opinion, what are some of the other factors that are driving up real estate values other than demand right now?
You know, right now, what's amazing to see is how many of these offers coming in are all cash. They're not being financed. There's somebody that says, I want to give you 250, 300, 350 on up in cash. And I think because of that type of competition, it's driving the prices up. I think it goes hand in hand with inflation. I think there's a good amount of people that are taking their cash and they're parking it in a house. during this time so that they can pull it back out later. I know several realtors right now that have talked about selling houses that a year later, they're still sitting empty. We hear the buzzwords of these people are coming in from the coast. There's people from out of state buying up all our property. I don't know the truth of any of that, but I can tell you just down the street from me, there is a house that has been empty for over a year. It's not under foreclosure. It's not in any kind of delinquency. The owner just simply hasn't done anything with it. And I think that inflation could be part of that. And I'll tell you something else that is kind of a chuckle, but I have to wonder with all these cash offers and the fact that people are trying to park their money in houses with Oklahoma's marijuana industry. There's a lot of people out there with a lot of cash that can't put it in the bank. So possibly some of those people might be putting it into houses instead.
Interesting. I hadn't considered that as a possibility. And that's an interesting comment you made there, that this house has sat empty for a year and you think it's because the owner hasn't really done anything to it. That kind of dispels this belief that right now with this hot market that you pretty much can just sell a house as is and expect to get market value out of it. That's not really true, right? I mean, people are happy to buy a house. They're happy to get it since inventory is low, but they don't want to buy a piece of crap either.
Correct.
If you're selling, you're gonna have to put some work into it. Although I will say this, I recently sold a house because we're building a house. And of course, when the inspector came through, they found a huge laundry list of things to fix. Shockingly, our buyers, they did not request much. Out of that list, they maybe requested 5 things that were easy fixes. I didn't have to do a whole bunch of work to it. And I was really surprised that the list was as short as it was in terms of the demands from the buyer. But there is still going to be some sweat equity that you have to put into it.
Well, and to your point, if you have a house that's a piece of crap, this is probably the best time to have that and be able to sell it.
Yeah.
But when you talked about so they go through and do the inspection, and that's something we obviously would want every buyer to do to make sure that you know what you're getting into when you buy a house. There's probably a little bit of hesitation there to ask the seller to do much on that list. They want to know what's wrong. They want to make sure the house is safe, but they also don't want to overstep their bounds and say, you know what, that roof is 10 years old. I need you to replace the roof.
Right.
That may have flown a couple of years ago. Right now, you don't want that to be a breaking point in negotiations. If you had your offer accepted, the last thing you want to do is jeopardize that.
That's right. That's a really good point. Hey, we just had a really good question come in from Eddie. And Eddie is a regular on the drive-through here. And this is actually a really good question. Okay. Why is there so much more demand nationally for real estate these past 2 years than before 2020? And the reason I like that question, Eddie, we completely get why demand has gone up for other products and services. COVID tamped down our demand for so much services, goods. And now that demand is high for those, you've seen the production of those things, but the houses were there already. What has suddenly led to all this demand for houses?
I think there can be several answers. I mean, one goes back to what we said earlier, inflation. You put your money into a house now, the way they are accumulating their value, it's a fairly safe investment right now. I don't want to take anybody away from your business. That my investments aren't with ChappelWood.
Our clients, we've got real estate exposure in our portfolios,
right?
In addition to whatever our clients might have outside. So
I think COVID also taught us something. So many people were not able to go into an office anymore. Some of them were happy about that. Some of them were like, I want to get out of the house. But the fact is, they had to work out of their house. And when you have people that are renting, whether it's a house, an apartment, or anything else, you're a 30-day notice away from losing not just the place to live, but your place where you have to do your job as well. And so houses give another sense of security there, so that you're not going to lose that place where you have to conduct your business. I think too, just remember, real estate houses are the one thing that you can put money in that's going to increase in value. It's not going to depreciate. So I think it's just probably a mixture of all those things, but the solid investment that real estate typically is.
Yeah. I also think it's a function of the fact that over the last couple of years, post-COVID, we know we have a labor shortage right now. And as a result, a lot of employers have had to increase what they're paying in terms of wages and salaries. Now you got a lot more people that maybe previously they didn't have the income to go out and buy a house, but now rents have skyrocketed. Depending upon your price point, buying a house and paying a mortgage payment is a heck of a lot easier than making a rent payment right now in many places. And so you've got a lot of people with extra money to spend. They want to take advantage of interest rates while they can before they really start to go up. And so that might be another factor. Not only do we have a reduction in the inventory, but we've got a lot more potential buyers now who are looking to go from renting to buying. So I'm kind of curious how much that's playing a role. So let's go in and talk about interest rates. So for a long time, really since the 2008 financial crisis, the Federal Reserve has kept interest rates near zero. And that's what's led to the huge run up in the market that we've seen. That's what's boosted economic growth over the last decade plus. Now, of course, we've returned back to raising interest rates. And I would argue it is necessary. It's necessary to cool off an overheating economy and inflation that we have not seen in 40 years. So Doug, I ask you, is there an expectation that raising interest rates will cool off real estate values? And how long do you think it's going to take for that to really have an impact?
Expectations that it will cool off? Yes. However, I'd like to pull out that crystal ball and say this is what will happen. It's probably something that'll surprise us all. That is obviously one of the functions of raising interest rates. I think it should eventually. There are some other factors that could be in there as well. The normal summertime moving period, where hopefully we'll have more inventory because people are needing to move. That could be part of it as well. But the other thing is, as many offers as we've seen that are coming in as cash, interest rates don't affect what that cash offer is. So that kind of tempers it out. I don't know how to predict whether cash offers are still going to be as heavy in 6 months as they are now.
Yeah. And the reality is right now, ladies and gentlemen, money is still very cheap to buy. Yes, interest rates are going up. Well, it went up 1/4%. Okay. 1/4% is not going to have that much of an impact on inflation immediately. It's also, is it going to raise your car payment or your house payment or your credit card interest rate? Yes. But 1/4%, every quarter at a time, it's going to take a while for rates to really get to a pretty high level. I mean, you're talking about still probably able to get an interest rate under 4%, maybe just over 4%, maybe 4.25. That's still cheap money to buy. So if you're looking to buy a house and get a mortgage, it's still a pretty attractive time to do it. So yeah, I agree with you, Doug. Rising interest rates will cool the market off eventually, but I don't think it's going to happen this year. I think it's still going to be a pretty hot market as we move forward through 2022.
I think so. And the fact is, there's probably a lot of people on the call that can remember buying their first house and locking in that 17, 18% interest rate and being happy about it.
And you were happy to have that instead of 25%. So
yes.
All right, let's get into this now. We want to so we got some really good questions. We've got people that are planning to buy a home. We've got people that are planning to sell a home. So we wanted to look at this from both perspectives. And again, ladies and gentlemen, if you've got a question that you would like to ask Doug specifically, please put it in the Q&A or the chat down below, just like Eddie did. So here's a question. I want to buy a home. Should I go ahead and just bite the bullet and plan to offer more than I was wanting to avoid missing out? And if so, how much more above asking price or even above my own budget should I be willing to go to try to get in and keep that deal for me?
Well, two different avenues you said there. So one is, should I offer more than asking price? The other one is, should I offer more than what I had budgeted? So let's go with the asking price first. That is a very easy, emphatic yes. You're probably going to offer more than asking price, especially depending on areas, even within the metro area. I can tell you, I live out in Mustang, and in my neighborhood specifically, 3 houses have gone on the market in the last week. All 3 of them closed within a day. Not closed, but the offer period closed within a day. They were open for 24 hours. They received dozens of offers. One just down the street, they listed it at $248,000. I know that a friend's client offered $260,000 cash. So cash offer, $12,000 over, and was told that if they had accepted that offer, they would have been leaving significant amount of money on the table. So I can only guess, how many more thousands of dollars somebody else offered. Yeah. There are deals to be had out there. You have to find them. And it goes into what we'll talk about probably here in a minute, and that's pricing a home. So I'll leave that discussion for a minute, but more than likely you're going to be offering more than asking price. And you're also going to be offering some other things too. You talked earlier about people having inspections. There are some people that are saying we will waive inspections. As an agent representing a buyer, I would never advise my buyer to do that. You can. A lot of houses are saying as is, and what they mean by that is when you get the inspection report back, we're not fixing anything. And that's okay, but you still want that inspection to know, because you still have an out in your contract there if you find something that is a major defect or a problem in the house, so you can get out of that deal so you're not getting into a bigger problem. But one of the other things we've seen a lot of is appraisal gaps. So if you are financing your house and the price you guys settle on is $250,000, and the appraiser comes out and says, well, this appraise is, I'm only putting a value of $230,000 on it. That means your lender is only going to give you $230,000. So there's a $20,000 gap there. Sometimes the seller can come down a little bit. Sometimes the buyer can come up a little bit. Sometimes they meet in the middle. But with the appraisal gap, we are actually seeing buyers put into the contract that if this appraises under what we're agreeing on, I will guarantee up to $5,000, $10,000, $20,000 of an appraisal gap. So those are some of the things that we're seeing on the offer side. Right. Now, the second part of your question was, should I expect to be spending over budget? One of the first things you're going to do, first of all, I'm going to be speaking more to the people that would be financing a home. One of the first things you have to do is you have to go and get pre-approved. Without a pre-approval, your offer is not going to be considered at all. And the second thing is you need to know how much money you have to spend and stay within your budget. The last thing I would want to do is put somebody in a home that, okay, they qualified for it, but next week after they move in, they don't have enough money to go buy groceries. That's not a situation you want to be in, and I don't want my clients to be in that situation. So we may have to look at it and say, you're approved for a $300,000 house. We're probably going to be looking at houses priced at $260,000 or $270,000, because we may have to go above asking price to get there. And we don't want to top out over not just what you're approved, but what you can afford to actually make the payments for.
Right. Yeah, you don't want to overextend yourself. And I mean, kind of a rule of thumb that I've always lived by is you don't want your housing costs to be more than 10 to 12% of your total income. Your total monthly housing costs to be more than 10 to 12% of your income. That's just kind of a rule of thumb to look at it. We did get a really good question from Jennifer here, and I can take this one, or Doug, you may have an opinion too. So Jennifer asks, a friend just purchased a home with a mortgage at 2.4%. Although rates are rising, how long do you think they will remain low, as in 3% or lower? I'll tell you this much, Jennifer. I mean, I don't know exactly what the Federal Reserve is going to do, but we do know this. They have 6 more meetings scheduled for this year. If they were to raise rates in each of those meetings, each of the next 6 meetings, our expectation right now is that they're going to raise rates 0.25% each time they do that. Well, 6 more meetings times 0.25%, that would be a total of 1.5% increase in the federal funds rate, which is the interest rate that banks charge each other for overnight loans. Okay, that's how our system works. That does not necessarily translate to a 1.5% increase in all loans out in the world. So I don't know exactly what that would do, but I would venture to say that even if rates were to go up another 1.5 by the end of the year, which personally, I don't think they are. I don't think we're going to get 6 more rate increases. But even if we did, and you saw rates go up another percent, we're still in such a low interest rate environment. Is it high relative to what you could have gotten a couple of years ago? Yeah. But is it high relative to history? No, it's still right in what I would consider to be cheap money. Do you have, and so I would expect, now I think 3% or lower, those days are going to go away. Maybe even by the end of the year, you're probably going to look into the mid 4s, maybe start now into the low 5s, depending upon your credit and that sort of thing. Doug, did you have a thought on that?
I think your friend got a great deal, first of all.
Yeah. Okay.
The other thing is some lenders, depending on who you work with, they might offer a rate lock. So if you go in and do the pre-approval process with them now, they might be able to lock in that rate for up to 90 days. And so that could be a product of that, where they had their rate locked in maybe a couple months before the actual loan generated on that.
Yeah. Yeah. All right. So we talked about what if I'm buying a home. Now here's the situation that a lot of our people on the call today, and we've got a good number of our clients on the call. What if I'm selling a home? So we've got people that maybe they are looking to downsize in the not too distant future. Should I set my price a little higher than I otherwise might, knowing that I can probably reap a bigger return with the way the environment is right now?
So as a person representing some buyers right now, these are the houses I'm looking for, because those are the ones I might have a chance at getting in on without a lot of other offers. So there's a danger in it. We'll take the, I usually want to say a normal $200,000 house. Let's be realistic. It's 6 months later, a normal $300,000 house. We want to sell that. And we're thinking, gosh, my neighbors, they all had offers coming in, dozens of offers over asking. They had a $300,000 house. They sold it for $325,000. Let's just list it at $325,000. And then when people overbid that, we'll be making $335,000, $340,000. There's a danger in that. Realtors that are representing their buyers, they may look at, they should be looking at the houses that you're going to look at and say, this house is priced right. This house is priced a little too high. This price is way over what it should be. And in this market where we have those houses that are going within a few days, if you have a house that sits on the market for even a week, let alone 2 or 3 weeks, because the price is too high, people aren't going to look at it and say, wow, the price is too high on that. They're going to look at it and say, what is wrong with this house?
That's exactly right.
And that's the last thing you want to do. So there's a lot of prep work that goes into pricing a house. In a normal market, you want to look at the comps. You want to look at what's recently sold around you. But like I said, just even within the last week or two, I've seen a huge shift in buying practices, at least locally here in Mustang. So when I want to price a house, I do not want to put it over what I think it is truly worth, because I don't want to keep buyers away and have it sit for a week or two and have people thinking that there's something wrong with it.
Yeah. Yeah. It may be one thing to go $5,000 up, but to go too much further, yeah, I agree. There's an old saying that we like to use here at ChappelWood: pigs get fed, hogs get slaughtered. Don't be too greedy. Okay. It's okay to ask for a little bit more, but if you get greedy, you could actually undercut yourself. Here's a great.
I'd rather have 15 buyers drive up my price than one seller.
That's right. Yeah. Let the market decide and push it up for you. Here's a great question that came in from our client, Mary Sue. And she and her husband are looking to sell their house here in the not too distant future and then buy another house here in the Oklahoma City area. So I understand why she's asking this question. Do you see this time as a real estate bubble that may result in significant losses on the value of the home if you buy right now? So it's kind of like the stock market, right? Buying high and then watching it fall. that's not a really good feeling, right? Is that what we're in right now with real estate?
I don't believe so. So that's my opinion based on what I've seen and what I've been reading from most experts. I believe that the market is going to level off. At the beginning of this year, what we were seeing based upon different lenders, averaging them out, they averaged probably looking at about another 5% increase. Now that's after a year in which we saw about 18 or 19% increases in house values. So I don't believe that we're going to see a drop in housing values because of this. I mean, who knows what other factors could come into it that would eventually do that. But I don't think what this is a bubble. I think just as everything has gone up with inflation, I think, you think about cars right now and the difficulty in getting cars and used car markets going up. You can call it a correction. You can call it a leveling out. But the thing is, Oklahoma City, the way that metro area has always been known as, hey, the real estate is cheaper here than it is in some of the other major metropolitan areas. The fact is, it still is, even though we've seen the prices increase, they're increasing everywhere. Yeah. And we're still on the lower side of it. So again, you got to pull out the crystal ball like we keep talking about. It's difficult to predict for sure, but based on what I'm reading, we'll see a leveling out. I don't believe we'll see a decrease.
Yeah. Yeah. I think it's kind of like the stock market. Why do we continue to believe that the market will end positive by the end of the year? Because consumer demand is still very strong, and demand drives prices. It also drives stock values. Well, we're still seeing extremely strong demand for real estate, whether it's on the residential side or the industrial side. Office is still kind of rough right now, but it is starting to make a comeback. And so long as demand for residential properties is still there, it's going to drive up prices, and that will then drive up value as well.
And I'll say this to Mary Sue, if you are planning on moving, I'd make sure you have a place to go before you put your house up for sale.
Well, and the good news for them is they've identified a place already, and that's a good thing. So let's move on here. And so here is the real question. All right. So this is the last question. I want you to pull out that crystal ball that you have right there. We have a wizard here at ChappelWood. So what tea leaves, I don't know what you read. What do you predict the real estate market will look like a year from now?
I predict that it would eventually level out. It would eventually slow down a little bit. Now, I've heard people say that over the last 6 months, that in 6 months it will level out and it'll slow down a little bit. It hasn't done that yet. But I think a combination of many different factors. We've talked about the interest rates. We've talked about the fact that, the summer season is coming up. Typically, we have more houses coming on the market during that time because people are moving. We have heard about, I haven't necessarily seen it yet, but I think there's a time coming where some of the COVID protections that were in place for people that were in houses that maybe they couldn't afford, some of those things coming to an end. And so that could increase what we see in the foreclosure market. I don't like to see that, but the fact is it's something that could add to the inventory. So those things coming together, I think are going to affect it. We talk about the new home builds. I tell you what, I feel for a lot of the builders out there because they're having trouble just even giving somebody a price on what it's going to cost to build their home, because they have to predict what the materials are going to cost 3 months from now when they need them. Mm-hmm. So I think there's several different things that will factor into helping this market. My best prediction.
Okay. Well, thank you very much, Doug. I appreciate that. And, people ask us the same thing. What's the market going to look like right now? Well, it's either going to be up or down. Back to you, Bob. That's my prediction. But like I said, we have a lot of confidence in the market right now based on consumer demand. And the same is probably true, at least for the next 12 months, for the housing market. Money is going to continue to be cheap to buy for those who are looking to finance. Chances are, if you're selling a home and you're going to buy a new one, yeah, you're going to have to pay more to acquire the new property, but you're also probably selling yours at a premium. And so the equity that you have to transfer over to the new one is probably going to be pretty nice. So hopefully it balances out for you. So Doug, I'm looking for a real estate professional like you. So tell me, how do I get a hold of Doug at Metro First Realty Unlimited?
I will give you my phone number right now. You can call it or text it day or night, 405-400-8281.
Okay, why don't you give
400-8281.
All right, so 400-8281. That's a 405 area code. So I can highly recommend Doug. I've known him for a long time. He's a man of his word, and he's also a man of education. He just mentioned that last night he taught a new home buyers course. He and I share that I believe the pathway to retiring well and just making good financial decisions is education. That's why we do the drive-through. Doug is all about the same thing. So if you're looking for a realtor to buy, sell, Doug is the guy. Give him a call. He is well versed, certainly in southwestern Oklahoma City, but really in the entire metro area. Is that true?
Absolutely. We're licensed to operate anywhere in the state, but anywhere in the Oklahoma City metro area, I've been out from Chickasha to El Reno in the past week. So, or I say Chickasha, I'm sorry, Choctaw to El Reno.
Okay. So what I'm going to do here, just for anybody who is looking, I'm going to go ahead and share your phone number in the chat. So 405, give that number again.
400-8281.
8281. All right. I just shared that in the chat function there, everybody. So if you need a realtor and someone to come and give you a good opinion of what your house might fetch, if you're looking to sell, then give Doug a call. I put his number there in the chat. So thanks so much, Doug, for joining us today. Really appreciate you.
Thank you, Damon. I appreciate the opportunity.
And everybody else, one final thing that I will tell you is that we have the drive-through for the month of April. Now in the month of May, we're going to be conducting strategy reviews. So those months are always pretty busy. So the month of May, there won't be any drive-throughs, but April, we're going to be on top of it. And then those of you who are here local in the Oklahoma City area, real quick, a quick plug. So Friday night, if you happen to tune into OETA, 7 o'clock Friday night for the Oklahoma News Report, you will see me, yours truly, at 7 o'clock. I participated in a panel yesterday that was recorded, and we're talking about cryptocurrency, Bitcoin. And so you'll see me. That's not really sparring. There are a couple of guys who are Bitcoin fanatics, and then there was me, the voice of reason. So tune in to OETA Friday night, and we'll send an email out about that. But it's the Oklahoma News Network, 7 o'clock on OETA. That's the local PBS channel here in the Oklahoma City metro area. You can check that out, and you can see, I wonder, does TV really add 10 pounds to Damon? And see, do I look bigger than I am right now? So, all right. Well, thanks so much, everybody, for joining us. We hope that you enjoyed it, had a good time. And we, as always, want to thank Doug for being with us. And I want to thank you for joining us on the Wednesday Lunchtime Drive Through. Take care. We'll see you next time. Bye-bye.